vibration that led success so high. I will achieve, I will fly high. IDBI in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
The first quarter of the financial year was good for banks. Despite booking mark-to-market losses, most entities recorded an increase in net profits. The second quarter is expected to be no different. Despite RBI's 190 basis point rate hike, banks are witnessing stellar credit growth. On September 9th, bank credit was 16.2% higher than last year. Deposit growth remains a concern, but banks are expected to perform well. Good morning, my name is Ishan Gera and you're watching the Business Standard Banking Show. In today's episode, we shall discuss significant banking developments of the week, like RBI's pilot of E-rupee. We have an interview lined up with Navroze Dastur, MD of NCR Corporation for India and South Asia. In the Banking for You section, experts explain offline payment aggregators, and our banking expert Tamal Bandyopadhyay discusses India's inclusion in the Global Bonds Index. At the end of the episode, we shall discuss the last poll's result and ask you a question for the next one. So stay tuned. After over a year of announcement, the central bank is ready to take the leap towards a central bank digital currency, a CBDC. In a concept note, the Reserve Bank of India outlined its vision for the digital version of the rupee called the E-rupee. RBI is considering the release of two versions, one to assist with retail payments and another one for wholesale transactions. Over 100 countries are considering CBDCs and 10 have already launched them. As per the Atlantic Council tracker, nearly half the world is in the research stage. India shall also need to either develop a bridge or become part of a larger bridge of countries for facilitating easy transactions with the world. Much like the Reserve Bank with the CBDCs, the government is moving fast on its plan to privatize IDBI Bank. Last week, the government and LIC invited bids to sell a 60.72% stake in IDBI Bank. While the government had sold its IDBI stake to LIC, many analysts had called the move pseudo-privatization. Now, with a major stake on the block along with management control, the move shall indicate the government's resolve. If successful, the government shall privatize two public sector banks, which shall require a parliamentary amendment. Another area where RBI has shown expediency is to stem a sudden currency depreciation. Foreign exchange reserves fell for the 9th consecutive week as RBI intervened. The forex reserves dropped by $4.85 billion to $532.66 billion. India's forex reserves have declined $110 billion in 13 months. On Monday, rupee traded above 82 per dollar level. It depreciated to a fresh low of 82.72 against the dollar in early trade before closing at 82.32. It is not just the currency markets which are witnessing tectonic shifts. The insurance market is set to experience the same. Debashish Panda, chairman of the Insurance Regulatory and Development Authority of India, said that if the country keeps this momentum, it shall become the 6th largest insurance market globally. He also said that regulator is working on Bima Sugam, a one-stop shop for all insurance needs. Panda indicated that more than half of the country's vehicles are uninsured. India will need to aggressively liberalize rules to increase penetration. The life insurance rate in the country is just 3%. Another industry that is set for a revolution is the ATM industry. After a slow pace of expansion over the last 2 years, banks are ramping up their ATM infrastructure. They added 2,796 ATMs between April and July compared to 1,486 in 2021-22 and 2,815 in 2020-21. Business Standard's Raghu Mohan had a conversation with India's largest ATM manufacturer, NCR Corporation's Managing Director, Navroze Dastur, on the way forward for the industry.
Hi Navroze, good to have you on the BS Banking Show.
Thank you.
ATM industry did not see much of deployments for the last 5 years, but all of a sudden we see deployments picking up. How do you view the plot at this point in time?
To a large extent, we have started seeing some traction in the market now, and there has been an uptick in the deployment of ATMs today. So we are close to about 258,000 ATMs that have been deployed in the market. And we are now seeing some uptick happening, and that is largely coming in from the deployments that have been done by the white label ATM deployers, as well as a few government banks that have now come out of their rationalization mode, which they were into because of the mergers and acquisitions that happened in the government banking sector. So a rationalization has taken place on the branch network as well as the ATM network. So now, after that activity, now we will start seeing further deployments taking place in the market.
Now, one sticking point all along has been the interchange. It's now back to 17, but it's actually a rupee lower than what it was in 2012 at 18 rupees.
Yeah.
Is this good enough for people who are deploying ATMs to earn a living out of it?
Definitely not. Okay, especially if you look at the additional investments that all the ATM deployers, whether they are private ATM deployers or whether they are banks, there have been a lot of regulatory guidelines that have come in from the ministry. You have MHA guidelines, you have from the regulator, from RBI, you have the cassette swap guidelines, then you had a lot of security guidelines that were brought in. All of these have primarily added on to the cost for a deployer of ATMs. So to be honest, I don't think the 17 rupees price point of interchange is any more valid from that point of view, because unless and until you get on an average, say about 140 to 150 transactions being done on an ATM, you will not be able to break even at the price point that is being paid today. So if you ask us, on an average, I think our costs today are in excess of 20 rupees when we look at deploying ATMs, because the national average today of transactions is just about 120 to 125 transactions per ATM. That's why you will see a lot of private deployers, or MSPs, service providers as we call them. We are not very excited to go out and deploy ATMs on behalf of banks whose transactions, per day transactions, are very, very low. So we would be happy to do it, on a fixed fee model rather than a transaction model, because the current interchange, we don't make any money.
Now, this leads us to an interesting point, in the sense that the channel is not ready to absorb costs. And now you have cash out via UPI at ATMs. Obviously, the load will go on the ATMs, and the cash deployment charges will also go up. Now, how does the channel look from a revenue point of view?
So I think the UPI initiative from NPCI is a very, very welcome initiative that you can do now cardless UPI transactions on the ATM channel as such. So we will hope and we look forward to seeing an uptick taking place in the transactions. We have not yet seen a small number of transactions have migrated to the UPI cardless on an ATM. Not yet in the large numbers that I am pretty sure we would all be looking for to happen going forward, as a lot of banks start deploying it. Currently, only a few banks, Raghu, have started deploying UPI, cardless transactions on their ATMs. So once it spreads and you're able to do it on all the 250,000 plus ATMs, yes, transactions should go up.
My point was something else, in the sense that if transactions were to go up as a result, there'll also be pressure on the cash loading side. And at the interchange of 17, can the channel absorb more by way of operating costs?
So in the current context, with the costs having gone up from a regulatory perspective, doing the cassette swaps as well as doing the MHA guidelines, currently it does not make commercial sense at rupees 17. Definitely it is a challenge. It's an uphill task for a deployer. It's an uphill task even for a bank.
Do you see a noticeable shift to recyclers coming up? given the cost benefits to be had?
Yes. So we did actually, Raghu, see a growth in recyclers taking place, about a few years back. Today, we are, however, at about, under 50,000 recyclers today in the country. So that has got impacted slightly because what's happened is most of the recyclers have got deployed in the branches only. And, currently there's a good business case for deploying recyclers in the branch because you can move the queues from the teller to a self-service technology, and you can also offer it 24/7. So yes, there is a strong business case currently at the branch for recyclers. However, in off-site locations, the business case doesn't stack up. And also the interoperability on all these 50,000 recyclers is not operational yet. So there are some challenges currently. We have not seen the numbers really going up because of these few concerns that are there.
Do you see a shift to wall-mounted ATMs given the operating costs involved in an AC kind of ATM location?
Yeah, see, wall-mounted, I don't think the cost, Raghu, will come down much because what happens at the end of the day, most of the technology, or if I was to say, the ATM is put through the wall, and that through the wall, at the rear of the wall also, you would yet require a sort of an AC environment. So you would not, bring down your cost that much by putting through the wall.
Thank you, Navroze. It was wonderful for you sharing your views with us.
Thank you,
More
Raghu.
power to till box, let me say.
Yeah, thank you. Have a good day. Thank you. Bye-bye.
Dastur says the largest deployments have come from the white label ATM deployers. PSPs have also come out of the rationalization due to mergers, he points out. He also says that cash is here to stay as much as digital. Talking about digital, the Reserve Bank of India has brought offline payment aggregators on a par with their online peers. But what are these offline payment aggregators? Let's find out in a Banking for You segment.
The Reserve Bank of India has decided to bring offline payment aggregators on par with their online peers to secure your transaction details. While the banking regulator has not spelt the operational aspect, there will now be a convergence of data collection and storage standards between offline and online PAs. Payment aggregators can't store your card details. So what are payment aggregators? They enable merchants and e-commerce sites to accept various payment instruments from customers and offer payment gateways to merchants. This is a simpler way of setting up a payments interface rather than opening numerous accounts with banks, card issuers, a unified payments interface, and the nature of the payment. As a third party, the PA does all of this for merchants. In January this year, RBI announced a framework to facilitate small value digital payments in offline mode. It enabled these payments between 200 rupees and 2000 rupees per day through cards, wallets, and mobile devices in the offline mode. This was done to help overcome issues of poor internet and telecom connectivity. Offline payment means a transaction which does not require internet or telecom connectivity. Such payments can be made face-to-face using any channel or through cards, wallets, and mobile devices. Since the transactions are offline, alerts via SMS or email will be received by the customer after a time lag. Transactions are to be capped at 200 rupees per transaction with an overall limit of 2000 rupees, after which the balance in the account is to be replenished. In offline payments, it's not that there's zero data exchange. The card details on the chip are read when it's swiped on a point of sale terminal at the merchant outlet. The initiation of a transaction happens in real time, but the settlement is with a lag. In March 2020, online PAs were brought under the purview of RBI regulations. which mandated that only firms approved by the banking regulator can acquire and offer payment services to merchants. In the recent monetary policy announcement, RBI Governor Shaktikanta Das said that whatever applied to online PAs will be extended to their offline peers to bring in regulatory synergy and convergence on data standards. Razorpay, Pine Labs, OnePay and Cashfree have received the RBI's in-principle approval to operate as PAs. Do remember that the National Payments Corporation of India has set October 31 as the deadline for banks to activate offline transactions on RuPay cards. The move will breathe life into the RBI's January 3 framework, which sought to give a fillip to offline payments and lead to the activation of the One Nation, One Card for on-the-go payments.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. IDBI in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In January this year, RBI announced a framework to facilitate small value digital payments in the offline mode. It enabled these payments of between 200 and 2000 rupees per day through cards, wallets and mobile devices offline. This was done to help overcome issues of poor internet and telecom connectivity. Another issue that is being keenly watched by the government and the RBI is India's inclusion in the Global Bond Index. Tamal Bandyopadhyay explains the rationale for this move and the pitfalls towards inclusion. Hi Tamal, thanks for coming on the show.
Thank you.
In this week's column, you discuss India's inclusion in the Global Bond Index. Have foreign investors been able to utilize the current pool available to them?
No, not at all. Very, very minuscule part. But one of the reasons is, if not the reason, is that India is not in the Global Bond Index. So, once you are part of the index, the investors typically get confidence to explore. I mean, look at in India is a part of the MSCI. So similarly, once you are a part of this kind of indices, the fence sitters and all, they get much more confidence and they take a call. Because apart from the sector-specific limitation, the caps which have not been used, apart from that, from 2021, Reserve Bank of India has started, a new kind of bonds, which is so far, I think 20 odd have been issued, which is called fully accessible route, FAR, where foreign entities, FPIs can invest money. Even that's also not used. So you can say that, well, it's not used, so why do you go to the bond index? I would say the other way. If you get into the bond index, then its possibility of the investment going up, it's much more.
Now, an interesting aspect of your column was the issues that you discussed with the Global Bond Index inclusion. Can you explain them in detail?
No, there are challenges. If you see, we have been talking since the taper trend term 2014, what we faced, the record current account deficit. So if I'm not mistaken, since then, it's been intense discussion. There are challenges. One of them, of course, the tax challenge, because of you have the capital gain tax and withholding tax for the investor's point of view, I'm saying. Other part is the settlement, they say, because typically not every country, but some of the countries, their bonds are being traded at Euroclear, the global exchange.
Yeah.
Whether India is willing to do, but here is a caveat. I think our bond market sophistication, the payment and settlement is one of the best in the world, probably better than some of the developed markets. So certainly there's not an issue. And the third point is it's very cumbersome, getting enrolled in India because the so-called KYC norm. Investors who are keen to explore Indian market, taxation is not an issue. Again, India probably is not averse to the idea of the bonds being traded instead of CCIL.
So why was there a sudden rush towards this global bond inclusion?
No, it's not sudden rush. Actually, the noise, I would say that it was more intensified and expectations were high because of Russia's exclusion, so there was a gap, and everybody thought, and the discussions are on, that this time India would get in, and probably India would get into the 10% club, because Russia's weightage was about 7%. And China and some other 7 countries, they have 10%. They are a part of the 10% club. So we thought that, many of us thought that this time, because of Russia's exit, there's an opportune moment for India's entry. But for reasons we do not know, probably the global markets, the scenario, all things are not exactly conducive. But I would like to believe the wait will not be long. Probably next year we'll see India's entry.
Now, a point that concerns me is an integration shall also entail India experiencing the effects of global capital movement much faster. Flight of capital will hurt us more. Is that a risk the government should take?
Absolutely, there is a risk. You didn't ask me, but I am telling you there's a risk for investors also. Because, investors, this is not dollar bond, this is rupee bond. So there is an exchange risk, right? Typically, rupee depreciates around 3 to 4% in the past 2 decades. I've seen every year versus dollar. So what happens is, if I am a global investor, the choice is between putting in money in dollar, that's US bond, and India. I need to earn higher than US from Indian market, right?
Yes.
Otherwise, I don't gain anything.
Yes.
Now, I need to earn more, and as much as which can also take care of the currency risk. Okay, so then what is the choice? A choice before me. I leave it open and take the currency risk, or I'll hedge my exposure.
Yes.
Now, the so-called hedging cost actually neutralizes your return. So so typically these investors don't hedge. So they keep it open. As far as government and Reserve Bank of India is concerned, yes, indeed, you are right. There is a risk of outflow, because any geopolitical development happens, if the money is rushing to the safe haven, which is typically US dollar, then you see there is a huge outflow. If you want the economy to grow between 7 and 8%, and we are into this Amrit Kal for next 25 years, when India turns 100. So if you want that kind of growth, our domestic savings is not enough. Mm-hmm. So you need to take that risk. It's up to the government, but my understanding is both the government and the regulator is ready to take the risk.
Thanks, Tamal. Thanks for coming on the show. We hope to see you again next week. Thank you.
Thank you.
Tamal says that domestic savings cannot help achieve the goal of Amrit Kal. We need foreign investors. He also points out that tax and clearance are not an issue with the Indian government. Last week, we asked you whether the central bank should have given more time to implement tokenization rules. Last year, when the central bank revised the autopay feature, it led to card declines and failures, and it took a long time for merchants and banks to cope up with the issue. Indeed, the audience doesn't want a repeat of that. 62% of the respondents said that RBI should have given more time to implement tokenization rules. 38% think RBI has provided enough leeway with a 9-month extension. This week, we would like to know your opinion on the rupee slide. The rupee on Monday crossed the 82 mark and went up to 82.72 in early trades. RBI meanwhile has intervened with intervention of $4.9 billion as forex reserves plummeted. So should the central bank get more aggressive in managing the rupee? With analysts talking about an 83 to 84 level, should the rupee be allowed to slide? You can respond on Twitter, Telegram, Instagram, LinkedIn and our website. Polls will open on Friday. Every time the forex reserves dip, the import cover diminishes. That's all for this week. We'll be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.